I have this theory that every $5 million you break most parts of your business. So if you aren't constantly looking at what you have in place and if it's still applicable and if it's still working, you're likely to have a bunch of broken systems that you have not addressed yet. So if you're a $5 million business, 10, 15, think about every $5 million increment, a bunch of things are going to break. And how good are you and your team at identifying things that are broken? Most of us caught off guard by something that happens in the business, and then we realize something is broken.
Welcome to the Profit Answer Man podcast. We believe the purpose of business is to make lots of money. We'll show you how to scale and grow your profit and cash flow, all while working less. We're a big fan of the ELF model: easy, lucrative, and fun. If you're the backbone of America, you deserve to be well rewarded for that. Listen in to see how other business owners are doing it and how to maximize your profit and cash flow. Welcome to the Profit Answer Man, Heidi Olson. It's great to have you join us today. And I'm excited for the conversation. Can you share a little bit about yourself and your business?
Started it because I wanted to make the lives of entrepreneurs. And so what we provide is accounting solutions, mission-minded nonprofits, and growth-oriented entrepreneurs by supporting profitable growth, protecting their assets, and amplifying their impact.
Why do business owners wait so long to make a profit?
That's a great question, Rocky. I think because when you start a business and you have an idea, you're so focused on just getting things going. And I would say the same thing about my business. When I first opened it up, I would take any sort of business. I really wasn't focused necessarily on profitability as much as I was on revenue. And I think that can be a big myth for a lot of entrepreneurs, is to focus solely on revenue.
When does that aha come where they go, revenue doesn't put money in my pocket that I can spend at home?
Usually that lesson is learned the hard way. I can't tell you the number of calls that I've gotten where an entrepreneur is so excited because they've doubled their revenue and they have all these sales, but they're saying, where is the cash? And then I go into their financials and it's locked up in inventory or receivables, and they haven't created the processes to support that profitability. They've created process or typically founder-led sales, and they're really good at founder-led sales, but the rest of it is gap.
And that makes a lot of sense. I know it does get tied up in inventory and receivables. I think an area that they're always afraid of is pricing, and increasing pricing to truly cover what needs to get covered as well as for them to get paid. Because, if you've got a 10% profit and you raised prices by 10%, you literally double the amount of profit you have, which when you have double the profit, you solve problems easier.
Good about pricing, they're not good about consistently updating their pricing. And I would highly recommend everyone follow Casey Brown, who's a great pricing specialist. I think she's actually going to be at the US conference. We heard her talk maybe 10 years ago, and ever since we raise our prices every year, and we've gotten our clients into that methodology and that rhythm of all one accounting is going to be raising their prices every year. So right away, it's really scary as an entrepreneur, because again, you're going to, gosh, are my clients going to be upset? Are we going to lose clients? But the reality is you have to increase prices because our costs are increasing. The cost of our teams, the cost of our facilities, the cost of our products, everything is increasing. If you don't keep an eye on that and get into some consistent rhythm, you're going to be left in the dust, and your EBITDA and your net profit are going to be, really hurting.
And as we are recording, gas prices are through the roof. And if you are a business that is heavy users of fuel, you have to look at fuel surcharges and also have the contracts and systems in place to be able to do that. On top of it, you might be facing fuel surcharges. And so I think a lot of times if you're not paying attention to your inputs, you're going to get squeezed, and you have to keep up. And your clients expect that. I think up until COVID, raising prices was very taboo. Since COVID, since inflation hits, I think it's become much more understandable that, hey, this is just the way of the world today.
Continues to go up and to recruit and retain the right team. We have to be able to support them with the right compensation, the right benefits, and the team is rocky, as we know. And so the pricing that we give to our clients has to reflect.
And I think that's why businesses struggle to hire A players is because they don't have the pricing in place to pay them sometimes. And that's one of the issues you're going to face if you're not willing to make sure that you raise your prices so you can afford to have good people so you don't have headaches all day.
This shows a lot of things that we're talking about. Financial is changing and he had his controller was an outsourced controller. She hadn't been around for about 8 months. By the time that we got in there and got everything current, he had lost like $300,000 for the year and didn't know it because of two reasons. One is the cost of concrete had gone through the roof and he had not adjusted his pricing accordingly. And two, he had consistent overtime overruns that he was not aware of. And so not only he just had no idea because his financials weren't done, had he had those accurate, timely financials, he could have made some adjustments real time and avoided this $300,000 loss.
When your pricing is behind the market, there's a good chance your business is going to skyrocket because everyone else knows you're on sale. And so they're all going to start coming to you and you're going to think you're great. And in reality, what happened is you were behind the curve. And every time somebody comes to you, you're losing money. What are the biggest issues you usually see with business owners coming from the accounting side?
To do. It's just one of those things that entrepreneurs get to learn how to do, manage, and make sure it's working. So the biggest issues that I see is that typically there's a person leading the finance function that's not qualified. And two, they understand in the beginning how their business makes money when they're very small. I mean, it's like you sell something for 100, your cost of goods sold is 50, your net income is 20. So it's easy when you build it from the beginning. But as your business scales and grows, those metrics change. And you actually have to look at them differently and having a team that understands that. And what I would say the biggest challenge that I see, Rocky, is that people are fighting tooth and nail just to get to accurate. They aren't timely. And that doesn't leave them the time to look at KPIs, do analysis, and really level it up to the strategy component, which are those risks and opportunities within the financials.
And I agree with you. Business owners didn't go into business to be accountants. I see that. It amazes me, though, that they don't even look into the numbers with any depth, even when they have good accounting. And it's funny how many of them don't even value good accounting. They look at accounting as kind of a nuisance or a have to do. They don't realize that if you don't understand how the money flows through your business, you're going to be more than often working hard and not getting the results you want.
So when you get a financial statement, it should have actionable insights. So what are we going to do with this information to better the business? And to your point, Rocky, I can't tell you how many times that we get into a prospect, we do a value workshop where we analyze the financials, where we are bringing so much information to that business owner that they have no idea. They have no idea that things are unreconciled. They have no idea that the balance sheet is incorrect. They've got negative assets and liabilities. And so my suggestion to any business owner is to go through their balance sheet monthly with the associated work paper and make sure that it makes sense and that your financial person can explain all of those numbers.
You know what drives me up the wall? Sometimes I will get a client who has a outside bookkeeping team and I'm like, can you send me reports? And what they will send me is a P&L and a balance sheet for the month in a PDF. And they don't keep all the months, so they don't have it, nor do they have the months stacked side by side. So like if I go to a baseball game, it's got 9 innings, right? And I can see the score in each inning and what's going on and where things occurred. They're looking at these standalone pieces of paper. And I don't even know what they're comparing it to because there is nothing to compare it to other than their memory. And no one is going to pull 2 PDFs up on screens and like go, hey, where did this change? And yet that seems to be the standard.
To me, that is probably one of the tools that we have because then you can easily look at your month to date P&L and your year to date and see all you have to look at is what's off track. You say, I'm going to do a budget versus actual, and anything that is off $1,000 or more, that's what I'm going to look into. It's going to be very few things on your P&L, but those are the things that we need to be paying attention to. And then I would suggest we should be doing the same thing with comparative balance sheet. What's changed this year versus last year? And that's gonna really highlight some things that may be of interest or may be a problem.
When do you find most businesses start to actually do a budget?
A lot of times we are doing the first budget for our clients. So it's usually several years into their journey before they realize or someone educates them to the power of the budget. And honestly, it doesn't take that long to do one, especially when you're smaller. It's a 2 to 4 hour activity for a controller on my team. We have a process, it's a methodology. And just that alone, I think, provides you with that comparative analysis every month that is so meaningful in your business. So, but I would say probably 2 to 4 years in, typically, before they even consider that.
Interesting. We like to start with the business model. And our business model is built on math. So, how are we driving revenue? What does it take to achieve the revenue that we want to achieve? And then what does it cost to deliver that product or that service? What does it cost me to run my business? And then where did all my cash disappear? Because it didn't necessarily disappear on the P&L. It disappeared on the balance sheet that you keep talking about. And if you're not, I don't know how they created the balance sheet report, but it doesn't show where it changed. You have to figure that out on your own, which makes it even harder to say, where did my cash disappear? And I've been told that QuickBooks cash flow reports aren't usually very helpful. They don't generate well. And so I think that's why a lot of people struggle. That's what most people do. Do you always use cash flow projections going forward? I only do that with my clients who struggle with cash, because if they don't struggle with cash, they don't want to put the effort in. And I'm okay with that.
Forward-looking things that are happening that might cause agree. My personal opinion is that managing closely is a waste of time, and that we've got to get into it and have people be in control of the business to not sit and because some companies spend an enormous amount of time managing cash, and at the end of the day, it's not.
What do you think is the difference between a company that doesn't have to worry about cash and a company that's always struggling in managing it?
I think the difference is the profitability and the understanding of the mechanics of the business.
So help us understand, when you say mechanics of the business, what do you mean?
So, a professional services firm versus like a real estate company, they're going to have much different capital needs. One is going to be very cash flush and be producing a lot of cash, and the real estate business is going to be sucking up a lot of capital. So you actually can't measure those two things the same way. You need to look at the industry and what they're trying to do and their capital constraints and needs in a completely different way. And I would suggest that on the real estate side, you have to be much more strategic about your capital and your cash versus in a professional services firm that tends to pick off cash, right? It's people and it's invoicing and clients for the most part. You don't have a lot of capital needs. You're not buying equipment. You don't have inventory. So much different needs, but understanding those things and understanding how you're going to scale. I mean, I think one thing people don't really understand, Rocky, is that when you're growing, it is going to suck and constrain your cash, right? Because the normal sales cycle is how long? That's the other thing, because people don't even understand what their sales cycle is.
So help us understand, what do you mean by sales cycle?
I mean, how long does it take to sell something, deliver it, and when you get paid? And how do we shorten that amount of time? So a lot of times when we start working with a client, we are looking at their AR process all the way from the beginning so that we are encouraging and supporting how do we invoice faster. So we need to actually look at the way we've structured our deals in a different way. And how do we get paid faster? So can I share something that's been a game changer for Lalvani County? About 15 years ago, we implemented where every single client of ours has to be on ACH or credit card payment. And because, Rocky, I just decided I didn't want to chase cash, right? And I didn't want to be the bank of Heidi Olson to anybody either. And so I can tell you that our receivables, we have like 500 active clients. Our receivables are crystal clean. Like, we get paid on time every time because of our approach. And it's something that I don't negotiate out of because I don't want to be a bank. I don't want to chase money. And I would encourage other clients to do the same thing.
And we do things the same way. And we encourage others to do things the same way. Some industries are not known for that. As a matter of fact, it just doesn't flow in those industries. And I'm like, if your industry is not going to accept this, I understand, but then we have to price for it. Meaning you have to say, hey, if I'm going to have to borrow money to do business with you because of how long you take to pay me, I better make sure that I put that into my cost in my proposal. It's not worth chasing money losing revenue. And you have to know what money losing revenue is, because a lot of times you get a big deal and you think it's the greatest thing, but at the end of the day, you spent a lot of time and money and didn't make anything. That's called a hobby.
There's industries where you're selling to the big guys, right? And they get to dictate the terms. That's where it's especially important that you get, because, the targets and the general, those guys are going to tell you what the terms are. There's not a lot of wiggle room, but to your point, then you have to build it into your pricing.
Where do you struggle the most with your clients? And what I mean by that is, where do they fight you and go, no, I really don't want to do this?
Most of the time they fight us on CFO time. They fight
Okay.
us on saying, I don't need that. I don't want to pay for it. And I'm like, that is the most important part of this whole thing, is having a CFO help you think about your business and how to profitably grow and how to protect your assets. I'm telling you, like, they're just taking those financials. I don't know, when I would deliver financials to a client, their eyes would just glaze over and they just put it in their drawer and they're doing nothing with it. I mean, what a waste. What a waste of all that time and energy that went into it, and you're not getting anything from it. Let's take those financials and figure out, what can we do with them. That's where you need a CFO to help you think about them. And then long term, like, what's that strategy moving forward? Financials are backward looking. What's our forward looking strategy?
Why do you think they don't value that?
I don't think they've seen the magic of what it can do in their business.
That would make sense. I say most business owners are allergic to the financials.
Right? I think we don't understand things really well. We all get a little heightened and a little stressed, right? And so sometimes it's easier for entrepreneurs to just ignore, to put it in, focus on the things that they want. Which is part of the reason I started on Money Company, so that we could take the financial burden from these entrepreneurs, so they could focus on what they're passionate about. So what I would say is, like, you can be allergic to it, but have someone on your team that understands it, that can translate the information, and that can help you be more successful.
And I think that's a big part of it. Someone's got to wear the hat. It's funny, sometimes during the sales process, people will be like, well, how long are we going to work together? And I'm like, when Coca-Cola fires their CFO, they don't eliminate the position, right? So whether you do it with me or somebody like you might get rid of me, but you're going to have to find somebody to sit in that seat unless you feel comfortable enough to do it. And even if you are comfortable enough to do it, I think what's happening is you aren't, A, sometimes you're too close to the weeds. B, you're not seeing what the rest of the world is doing around you. So you don't always know some of that. And C, you're not probably spending your time getting better at that part of the function. You're not improving yourself because you're busy improving what it is you deliver and what you love. And so have people do the parts you don't love. That's a big part of it.
That I would challenge people is, don't look at your accounting line item as an expense. Look at it as an investment that should pay off tenfold. And by that, I mean supporting this profitable growth. Your CFO and your accounting team should be bringing real life, valuable insights into how you can specifically increase profitability. Protecting your assets. Rocky, this has never been more important. So when I say protecting your assets, when I first started online accounting, I was trying to protect my clients from their own internal accounting team, right? Their bookkeepers, their accountants, their CFOs, and their controllers. Now I'm trying to protect my clients from anybody who has internet access. And that is the truth about what's happening with, all the cyber threats and hacking and taking over of, like, wire fraud. There's so much happening. If you're not on top of it, if your accounting team is not on top of it, it's just a matter of time.
So how do you prevent those threats, or what are you doing differently?
Yeah. A couple things. One, we have really, really strong internal controls, and we have extremely strong processes around AP. Anything that gets paid for our clients, we get verbal confirmation from our clients. Everything. So nothing goes out because there's just too much deep fake stuff even that's happening. The other thing is we share a lot. We have a while back we put a system in called Code Red Alert System. So anyone on our team that sees anything suspicious with any of our clients, anything that they think is weird, a weird email, something in the bank, like some weird invoice that they have 15 minutes to call my COO, and she deals with everything. She pulls in legal, she pulls in technology, she figures out if it's a real threat. We put this in place about 8 months ago, and I think she's had over 80 calls from our team. Some of them real, some of them not, but like you need the right people dealing with stuff like that. And time is of an essence. Like that's why we put a 15-minute marker in place, because we know that the faster we get after something, the more money we can save our clients if there's something happening.
And you are correct. The level of fraud and the complexity of fraud and the quality of fraud has gone better and better. And even when it's not your fault, it's almost impossible to get it solved. And what I mean by that is I've had clients whose IRS checks got stolen in the mail and banks cashed them. And trying to fight with the bank was difficult.
Paper check. Here it is.
The IRS wouldn't send EFTs. It was the last round of checks they were sending out for it wasn't EIDL. It wasn't a loan, it was a rebate after PPP, that next round, and they refused. The IRS said we send paper checks. Correct. But this is the other thing. Even within the QuickBooks system, QuickBooks is not so great and secure, and they don't care to do the follow-up. The amount of fraud that can occur inside that system is pretty bad too. And that's the thing. These other people they're not taking their responsibility. And so the whole thing is kind of getting wild. Now, you run your company on EOS. I'm a big fan of EOS. You usually don't see that in the accounting world, but here you are. What prompted you to run your company on EOS?
My business, I was on what I call the entrepreneurial struggle. So Rocky, I was a great CFO. I was great at delivering to clients. I had raving fans. As I tried to scale and do all the things, wearing all the hats, right? Doing business development, doing accounting, doing HR, hiring people, all the things while also delivering 40 hours of CFO work a week. I can tell you this, I wasn't very good at a lot of those other things, Rocky. And I had this misnomer that I could just hire really smart accountants and tell them to go do good accounting. And that doesn't work. I think if you find a bunch of unicorns, that could work for a very short amount of time, but there's not very many unicorns out there that can kind of do everything and know what to do and are good with people and all those things. So I was like this constant 2 steps forward, 1 step back. Then I read Traction and I was like, this is the answer to all my problems. It was like, this is it. So CJ Dubé was our first implementer. I would call her the queen of EOS. And we were too small, like we were less than $1 million. And she graciously took us on. And I can tell you, like, we've been a hockey stick ever since. Because the reality is, I was sitting in every seat and I had people helping me, but no one else owned a seat. And that was like the biggest aha. And then the second biggest aha is actually how terrible I was at doing so many of those things and realizing this is not my gift to the world. So again, I was really good at my service, Rocky. I wasn't good at building a business. Those are two different things. And I think most entrepreneurs like me think, I'm just going to be really good at my craft and solving a problem in the world and everything's going to go swimmingly. Well, building a business is a lot of work. It takes a lot of structure. It takes a lot of process. It takes a lot of right people in right seats. And I don't know about you, but I didn't get trained how to build a business in college. I got trained how to be an accountant. And building a business is a completely different thing. It's a different thing.
Did they actually teach you accounting in college?
They did. I would say I certainly had a lot of light bulb moments when I got out in the world of how it actually worked. I really do remember the day that I was like, oh, this is how that all works. I mean, I really had to be hands-on, I think, to really, truly understand what I was taught in college.
And I have an MBA. I have an economics degree, but They don't teach you how to run a business. And I think a lot of it is theoretical, but when you get out into the world, you see how things actually work and how they actually flow. And businesses have a lot of different parts. And, when you're small, you can kind of wear all the hats. It does get old. And let's face it, we are not going to wear the hat we don't like. That's just the reality of it. And so it's going to sit there and be a thorn in your side until you find a way to do that. And I think what's happened now is this whole fractional space where you can hire A players for just a little bit of time, because in a small business, you don't need that much. And it's a great way to be able to bring in experts into your business to handle things. You have to find the right ones, which is sometimes a struggle. I know a lot of business owners bring them in on the marketing side, but I find most people who sell marketing are good at selling marketing, but not good at marketing. So it's a struggle, but you have to find the right people. And I think you have good conversations, you ask the right questions, and that's the problem. A lot of times they don't even know the right questions to ask, and they're afraid to say anything because they don't want to look bad.
How often are you able to get accurate on the financials of which to be involved?
It depends. It depends on the client. Sometimes in the beginning, they're not. And we will work to put systems and processes into place. Here's the thing that I've come to learn. Number one, I just need directionally accurate. I don't need perfect, and I'm okay with that. Two, if we're really going to be messy, this is where profit first becomes a godsend. Because profit first is show me the cash, show me where it is in this moment. And if you can manage the cash, the rest of it technically doesn't matter. And so, but the bigger the business gets, profit first will always work. It's not going to give you the insight of where the problem truly is, which is, I think it's the number one reason profit first fails in most businesses is because their business model's broken. And so they blame profit first instead of saying, how do I fix the problem? And that's the problem. In the book, they really don't show you how to fix it. That's literally our superpower, is going in and going, oh, this is the reason it doesn't work in your business. We make these changes and it will work. Not everyone's willing to make the change.
Their response to that can be very telling about how much they understand about the business. And are they still thinking what the business was 10 years ago when they started it? When they answer that?
So here's what I find. Even when they have good answers, well, we do this, and they give you specifics about different things, average sale price, this, that. Then I go into the books and I'm like, I don't know what business you think you're running, but the books say it's different than what you told me it was. And that's the big part of it. And here's the thing. Tell me what you find. Getting the 7 figures doesn't solve it, and getting the 8 figures doesn't solve it. Because I can't tell you how many 7 and 8 figure businesses I come across where this is still the issue.
I have this theory that every $5 million you break most parts of your business. So if you aren't constantly looking at what you have in place and if it's still applicable and if it's still working, you're likely to have a bunch of broken systems that you have not addressed yet. So if you're a $5 million business, 10, 15, think about every $5 million increment, a bunch of things are going to break. And how good are you and your team at identifying things that are broken? Most of us caught off guard by something that happens in the business, and then we realize something is broken. How do we get more proactive?
What I find is the more employees, the further away the business owner is from the front line, the more things are actually broken and they just don't know it. They assume one thing is happening, but if they haven't tested or checked, they don't realize that it isn't happening the way they thought it was. I would just say sampling. And so it might be pulling up an invoice or a handful of invoices. It might just be having a 10-minute conversation with a frontline employee. Just the business owner, if they have a casual conversation and they ask some good questions, they can usually go, wait, what? How is that happening again? But you have to do that. Or maybe just get out there and watch a different part of the business at a different time, or ask them, say, hey, what are you struggling with? Or what is causing you, what's making you work harder? And your frontline employees, if you've created that culture of trust should tell you that. Well, I can't do XYZ because this is limited or that doesn't happen or I'm missing parts or we do things this way because we're told you said we had to do things this way. It's like, yeah, that was 10 years ago. We changed.
It's interesting when you get into like a new client, you're asking them about, I see you go from A to B and I see these 10 steps. Like, tell me about that process. Well, that's the way I was taught to do it. And that's the way I've always done it. So then when you come in with a fresh set of eyes and start asking questions, well, what if we took 2 steps to get from A to B instead of 10? Would that work? That would be wonderful. Can we do that? So sometimes I think that, especially people that are in one environment, they don't see other things and they don't question the way, again, we're going back to questioning the way things are done. Are we still getting the desired result? And is there a better way to do that that's more efficient?
Do you know who the master is at this? Elon Musk.
Oh, yeah.
He will walk onto the factory floor. He's like, why are we using 5 bolts? Well, so-and-so said we have to use 5 bolts. Go get me so-and-so. Why are you using 5 bolts? Because that's what we do. He's like, you're fired. Let's try this with 3 bolts and see if I break it. He goes, if we're not breaking stuff, we're not trying hard enough.
Yeah. I would say if we're not failing, we're not trying.
Yeah. So he will for the richest man in the world, he's frugal. There's nothing wrong with being frugal. In business, you need to be frugal.
Yeah.
If you don't need 5 and you can do it with 3 and 3 is going to give you the result, do it with 3 and challenge everything.
Concept recently, like start eliminating stuff and see if anyone notices, right? You got all these reports and all these things that you do, like start questioning whether or not these are still important, effective, and like stop doing it and see if anyone says, hey, where is that? Or like, I think it would be very enlightening.
It would be. There's a lot of wasted stuff in business.
Yeah, there's a lot of waste, right? And I think as leaders, I'm certainly focused, and I just had this conversation earlier with my RevOps team, like we've made this too complicated. Our job as leaders is to keep things simple, predictable, systematized, structure. Like those are the 5 leadership disciplines and abilities. As a leadership team, we need to constantly be asking ourselves.
That is very true. Well, thank you for joining us. If anyone would like to learn more about your company, how do they find you?
Yeah, we're at www.allinoneaccounting.com. You can reach out to me directly at Heidi, Heide, at All in One Accounting, or give me a buzz.
Thank you so much for joining us today.
Thank you, Rocky.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.